Sorry, I have a loud voice. Can you hear me better now? All right, I'm excited to be here. For those that don't know me, I'm from Houston, Texas, which is a weird place to be in the cannabis industry, but I've been following the industry for 6 years now, and I came to the first ICBC conference back in San Francisco, and it's a little trivia. I think it's the only conference I've ever just attended. I'm usually like either speaking or something to do with the media. But I do two things, but they both revolve around following the industry for investors, really. And I run 420 Investor, which focuses on public companies. And we have one that's about to be public here, so we'll definitely talk about that. And then I also run New Cannabis Ventures, which covers the whole space. And it's the basic purpose of New Cannabis Ventures is to keep a pulse on the business side of the industry and help investors and operators kind of find out what's really going on. And so I'm glad you're here with us today. We have three very different types of people and companies, and we'll be learning from them. A lot has changed. Two of these are OG guys that I've known for a while. So I'm going to start from the far right. So we have Scott Van Rixel from Bang. I'm sure everybody's pretty familiar with Bang. But he's been in the industry since 2010 and about to go public. So we're going to hear that perspective of what it's like to transition from private to public. And then we have Dean Arbit, who's been in the industry since 2011, I believe. And I didn't even know this. I've known him from the media side and all of his investments, but he has been involved with a really interesting company called Wagner DeMoss, which is a technology company for pre-rolls and other things as well, bud.com. And then I just met Carly. And pinch hitting, actually. And I wanted to point out, Jake had a family emergency. You may be expecting to see Jake Highmark. He couldn't make it. And Aaron also had a family emergency, unfortunately. But we're lucky to have Carly. And I'm going to let everybody start off by introducing themselves. But Carly is from Garden Society. All three of these folks are from California. But what I think you're going to find to be so interesting is that they're all involved not only necessarily just in the rest of the country, but really in the rest of the world as well. Things are changing that much. So it's cool to be big in California, but there's a whole big world out there, and we're going to find out. So what I'd like to do is start off with you, Scott, and then we'll work our way back. If you could just talk about what you were doing before you came into the industry and what you're doing now.
Actually, what I was doing is kind of how I ended up in this. I had a chocolate and gelato company in Albuquerque with my brother. We had a problem with our gelato, and a friend of mine who opened one of the first cannabis labs here, Robert Martin, invited me out as he was opening his lab, and he took me around, showed me the dispensaries, and as a chef, I was dismayed, and then when you add that there was supposed to be medical products, I was kind of embarrassed. Not that people weren't capable, is that people weren't making the choice to kind of do things what I saw as right. Came out a couple months later, started Bang, and we progressed from there into what I believe to be one of the leading cannabis brands for finished goods.
Dean, same question to you.
Thanks, Alan. So I started in 2011. Previously, I was in the media space, had an exit there, and initially got into the media side of the cannabis industry. Was an enthusiast as long as I can remember, but got into the media space, which gave me a lot of visibility and a lot of color, a lot of data, and then a couple years later started to actually make investments and embed with companies. And so actually at one of an event that I founded, New West Summit, was where I met Mitchell and Morgan, my partners in Wagner DeMoss, which is a very interesting technology. It's essentially we've patented a pre-roll platform that allows us to produce in great scale. And so we work with a big public company in Canada to license that. And then the other interesting thing I do, so we produce we're our own licensee in California, working with other brands. And then on the retail side, I help run Bud.com, which right now will be statewide delivery in California sometime in the second quarter. And then we're also launching an online store for non-THC goods that we'll be able to ship worldwide, CBD and merchandise and that type of stuff. So,
And Carly Warner, same for you.
Sure. So Carly Warner with Garden Society, just like Aaron, but a little lower altitude. We founded the company in 2016. That's when I entered the cannabis industry. Previously was in wine for 10 years, which is where I met Aaron. And we really launched Garden Society as a way to reach women in a market where they weren't being reached and in a way that they weren't being spoken to. So we're really proud of what we're building. We're really excited to be working with a lot of different partners within the industry to make sure that we can help break that stigma down and make a change.
And you weren't just in the wine industry, it was with Constellation Brands, right?
Yes, so I was with Constellation Brands and actually helped launch Aaron's husband's wine brand through that company, which is how we met. Yes.
Okay, so now you know a little bit about who you're going to learn from today. So my first question is for both of you on the right. You guys, like I said, are kind of OGs in the industry. You've been around for a long time, and things are definitely changing right now. And I was wondering if you could share your perspectives on, compared to 5 years ago, perhaps, how things have changed in terms of the capital markets and raising capital.
You and I kind of spoke about earlier that the idea of institutional money was absolutely unheard of 5 years ago. That's an obvious significant change. I think the risk factor of people feeling comfortable now that companies are public, there's more of them, there's more options, there's more sites like yourself that are providing good information for people where they're able to make investments without just putting on green goggles and saying, oh, I'm going to turn $1 million into $50 million overnight. And aside from that is also the maturity of the companies. You know, even our licensing program went from, you know, who you could get to now actively searching out the best. And I think that that's something that I think goes to people feeling more comfortable and mitigation risk is the maturity of the industry, the maturity of the operators. Regulation has certainly imposed its mighty will in California. You look at how many operators there were in California 18 months ago to how many are in place now, and Dean can certainly attest to that. It thinned the herd, and that's happening across the country. And California was unique in showing how that would happen in that it had a very thriving, functional industry at a large scale with relatively no regulation, and then suddenly there was regulation, whereas if you take most of the other thing, you had black market, but that influence of regulation allowed it to grow, and I think that's a testament to the California companies that survive were the ones that could adjust quickly, and I think that that's a big change, and those companies will be rewarded.
Dean, you've seen both sides of it, as an investor and in somebody raising capital. How have things changed?
I'd probably just really echo a lot of Scott's thoughts there. The sophistication level of investors has just ticked up. I think a big driver there is Canadian legalization. What that's done is it's just exacerbated. I think it's pushed the process along for even U.S.-based investors who now see essentially missing the bus. And then obviously with Constellation, you've got now an avenue for institutional money. It's just going north, but still then it sort of matriculates down. So it's just essentially sophistication, which is ratcheted up, and I'd say that's probably true for both investors and operators.
Carly, I think your company operates solely in California right now, but you're raising money from investors, and I'm curious, when you have these conversations, how much pressure are they giving you, or how much do they want to see you guys go outside of California, and what is your philosophy on how to handle that pressure?
Sure. So we're definitely getting that question from all investors that we're speaking to in a serious manner. We aren't currently looking to expand outside of the state, but it is in our future plans. I think that's mandatory. But we're not getting an immense amount of pressure, I would say, to quickly go multi-state, but it's definitely within like the first couple of conversations.
And how many calls a week do you guys field from Canadian investment bankers?
I would say Aaron fields most of them, but there are quite a few. How serious they are is questionable, but definitely a few of them have been.
Okay, so my next question, and someone already hinted at the Constellation investment, but Altria, Ambev, which is Budweiser, Constellation, and Molson, they've all made these strategic investments or partnerships into the space. And I'm curious, on the one hand, it kind of validates the industry, but on the other hand, I think smaller companies have to be a little bit concerned, and I'll go in reverse order here. How do you view these big strategic investors coming into the space? Is it an opportunity or a threat? What's it make you do differently?
Definitely opportunity. I think that there's a lot, for all of us to learn from what they've done and the money that they're bringing in. I think we need to be really careful, and that's a big reason why we're trying to scale sustainably right now so that we can be appealing to someone like that. But, it's not necessary. It's a little ways off for us right now.
Is it impacting you?
Well, I think it validates the space. I think if you're talking about, look, there's still some murky issues there as far as legality, and when you're talking about borders, and I think it's a testament to the upside in our industry, the fact that blue chip brands are now seeing that this is a mandatory play. So I think it's absolutely an opportunity, and I think it's one that operators need to embrace. It's not going backwards. Yeah.
Are you afraid of this, Scott, or do you embrace it?
No, I think the first round of those investments were those companies seeing two things. Can we cover the losses that we're seeing in our, Southern Wine and Spirits was fairly open about the fact that in markets where cannabis is legalized, they experience a 6 to 8% reduction in alcohol sales. They've got to cover that somewhere. And I think that the alcohol and tobacco industry, that first round of investment was, how do we redeploy money to a market that we're losing ground to? That's number one. And number two is those smaller initial pushes were, how are our shareholders and is the market going to respond to us as a company getting our toes wet? Once they saw that was going to work out well and it was a good thing, that's when you had that second big plops of money. Now they felt comfortable to dive in as opposed to touch a toe. Since we started our company, I've always believed the end is either going to be one of two things, bought or bullied, and I would much rather be on the bought than the bullied. I think that the cannabis space has to focus on having products and concepts that are going to appeal to those who might bully and are more appealing to buy. I mean, you look at vitamin water as a perfect example. Coca-Cola very easily could have developed a vitamin water on their own. It was far more efficient for them to just buy it. I think that there's a small handful of cannabis companies 20 years from now that are going to be still standalone, unacquired. I think that'll be a rarity, not the norm. The tobacco industry, the pharmaceutical industry, the alcohol industry, they just have such a head start and such access to funds that it will make it difficult for cannabis to just be a monster on its own. But I do see them bringing their technologies, their marketing insight. All of us in the room that are hiring from those other industries, we're hiring from those other industries because we know they have the experience to do what we want to do for our companies in relatively similar, I hate to use the word vice, but vice-related industries, pharmaceutical being a little different. But if you're going to look to how to market cannabis well, you're going to look to a company that's been doing either tobacco or alcohol because those are the most similar things that are being marketed. And I think that they offer a lot, but they have to be managed, and those relationships have to be managed so you don't just get pushed.
So one thing I'll add is I think, yes, those businesses all have, they're mature, they come from mature industries, and they obviously have framework that can be adapted for our space, especially things like CBD, where you're talking about mature distribution channels. The one thing that all those industries are going to need, and this is what we all need to understand, is it doesn't work if you go and spin something up and there's not authenticity behind it, and you get into cannabis. I think the consumers see past that and smell it out. So I think that bodes well for those of us that understand who our customers are and our customers ourselves, and live it. I think that the marriage between understanding cannabis and the cannabis culture, which was bred over the 70 plus years of prohibition, that doesn't just sort of get wiped away. Altria doesn't get to come in and sort of do as they did, with tobacco, nicotine. So I think that's the one piece that I think we all need to understand, is that they need us. It's a big part of it. They don't understand the space. All they understand is that it's white hot and they got to get some. But they need us to be able to sort of route them and strategize, essentially.
One thing I'd say with that is the worst investment or purchase one of those big companies could do would come with a clearing of house, because to your testament, you know a lot about distribution, you know a lot about manufacturing cigarettes, whatever it is. What you don't have is that ongoing relationship with the cannabis space, and that is, very few products that people consume, the product itself, do they have that close connection with? I mean, in the alcohol world, if you have a really close connection with alcohol, you're an alcoholic. In cannabis, it's part of, whether you're using it for healing purposes or you're using it for enjoyment or whatever it is, there's a connection there that simply slapping another brand name or a large-scale operator, and I think a good example of that is, the Starbucks guy was, I'm going to take over the world. That did not go over well because the cannabis space rejected that idea of just force-feeding that down their throats. And I agree with Dean, is I think that we have a lot to offer them as well, and I didn't want to present that we don't. I just also know that a lot of what we're building, in many cases, they already have. National distribution, framework for dealing with interstate commerce and taxes and regulatory stuff. I mean, that's something that's completely, we deal with a single tax authority, IRS, at state or federal level and local, but when tobacco and alcohol moves across state lines, there's all kinds of new tax things that will, again, be new to our industry unless we have someone kind of showing us the way through those acquisitions.
So the next question is about CBD, which is really a juggernaut right now, white hot, I think you said. And I wanted everybody to hear kind of your perspective, and we'll start down here and work back, on how the popularity of CBD is impacting your business.
For us in particular, it's significant because our model over the last 8 years, going on 9 years, has been our licensing, where we're collecting a royalty from our licensees in individual states. It's substantial, it's nice, it grew our company, it allowed us to spread our brand, but it wasn't reflective in a significant top-line revenue generator. If you reverse the math out, it's great, but again, it's not our top line, it's our licensee's top line. CBD allows, at least our company, the ability now to have that centralized manufacturing, whereas cannabis, you're stuck with potentially 50 separate production facilities. That's economically not sensible. Centralized production, centralized distribution is something that we can accomplish with CBD. So I see that as a great value to our company. In addition, CBD and CBD products and terpene products are a great way for us to start to access those cannabis curious marketplaces where cannabis is not yet legal, and retail where you're not dependent on a small group of dispensaries. You have access to hundreds of thousands of locations across the country. I mean, take cigarettes, Dean is in the pre-roll business. We have a hemp cigarette. There's 374,000 locations in the United States that sell cigarettes. It's a huge access to a market that we wouldn't have previously had, even if we had a licensee in every state. So I think that that's certainly going to pave the way for success for cannabis companies that have the understanding to see that that's another part of the plant, another part of the market, and another opportunity for us to access buyers that we wouldn't necessarily be able to do if we were just focused on selling, I won't say THC products, but marijuana products in the marijuana marketplace.
So I agree. I think CBD and hemp, and specifically what the Farm Bill brought on, it's an absolute game changer. So for my businesses, for Wagner DeMoss, we have a technology that rolls joints. I can roll more joints than people can smoke. However, hemp is a different story. So now we can sit there and we can distribute to 370,000 stores, smoke shops, or C-stores, instead of the 500 dispensaries in California. So you're talking about a massive, broad market, and you're also talking about a great organic product that we think, as far as smokable hemp, which Scott does, we think it's a tobacco cessation play. Not sure about the health benefits, but we think it tastes better, and it's less addictive. For Bud.com, same thing. Instead of delivering, within a given footprint that's tied to compliance in each state, now we can ship worldwide. It's just that simple. So now the 97% of folks that land on Bud.com can actually buy something. Game changer. Yeah.
So as a California company, are you guys able to capitalize on the CBD trend?
Yes, CBD is really interesting for us. Our target demographic is definitely ripe for hemp-derived CBD products. That said, it has the low point of entry, and women really feel safe. There's a lot of buzz around it right now. It is also a little gray in terms of legality still for consumption. So we're really, as a smaller company, trying to stay laser focused in our THC side of the business, making sure that we build and scale sustainably in California, but it's definitely something that we keep on our horizon in addition to things like multi-state and that sort of thing.
Okay, and then my next question is about licensing, and just I'm sure everybody can appreciate this. You just heard a while ago, 50 different states that you have to build factories in, et cetera, if you want to be a THC company. And so a lot of companies right now are partnering, they're JVing, there's a lot of different models out there, royalty. And so I'm going to start with you, Carly. Why are you guys not licensing your name into other states? You said that you're not there yet. So I can understand why you don't want to physically build out in other states, but what's holding you back on the licensing part?
I think part of it has just been, again, that laser focus on building and scaling in California. But again, it's something that, we've had conversations. We've had conversations with different people in different states, but it just hasn't been the right opportunity yet, but it's not something that the door is closed to in any way.
Do you think you guys would rather build out in separate states, or is the licensing smarter? How do you guys go about thinking about that?
I mean, every day is different. Some days we're like, we should move into this state right away. We have this and this connection. It would be so easy. And then other days we have, we had someone call us from Florida. We're like, that's interesting. We hadn't really considered Florida as much as, Nevada or some other states. So it's just different day to day. We just haven't had the right opportunity come across our plate yet. But I think once it will, we'll make that decision then.
Dean, as an investor and an operator, you see both sides of this. What are some of the pros and cons of owning everything yourself versus partnering and royalties, things like that?
I think we see, look, California is bigger than Canada, right? It's a massive market here. Our idea is sort of across the board with all the businesses is definitely to partner with strong folks that understand their regions and have resources there. We do what we do, and then I'm a big believer in licensing. We've licensed our technology in Canada, and now we're rolling out licensing the pre-roll technology to multi-state operators in different regions of the U.S. So big believers of that.
Rolling out, I got that. Scott, you guys obviously are very advanced on the licensing. You talked about some of the pros and cons already, but what else do you see as some of the pros and cons of owning the assets versus partnering with people? I know you're in Canada through a partnership, for instance. How do you see
I mean,
it?
part of I would say more in some levels now it's a necessity because almost all states have limited licenses. They're in many cases have to be vertical. You're talking about huge capital outlays. Our licensee in New York just to turn in their application was $1 million just to apply. That's doing that 50 times over and then trying to manage all that. And each state's tax, I mean, really each company would have to run as its own entity. Or maybe more hair falling out than as is. It's something that we just felt licensing was the best path for our goals. Now there's more mature players in the marketplace. There's more mature operators in the marketplace. Now we're still doing either licensing or the preference is JV, simply because they feel we have a bit more skin in the game, and that's been driven by both sides of the table in that when you're in a market that there's a limited license count, in many cases, they're the driver. 5 years ago, I'd get a lot of calls of, hey, we'd like to license Bang, hey, we'd like to license Bang, because there was that drive. On the other side of the table, they're like, well, do we need Bang? Because we have a captured market. I'm gonna use Trulieve as an example in Florida. When they called to ask us if they could license Bang, my first question is why? You control 75% of the market, between 70 and 75% of the market. You got a stranglehold on the market. Why would you need Bang? And she said, because people are asking for it. That's the right response that I want to hear. We did a licensing agreement with them versus a JV. It's just the players in the marketplace I'm actually more comfortable licensing to now.
A little bit more visibility.
Origin House, Canna Royalty, formerly Canna Royalties, they're publicly traded. Trulieve just went public. There's a lot more confidence that this is not going to be someone that you have to babysit. You babysit your brand, but them as operators, the state's looking over their shoulder with testing. The state's looking over their shoulder with compliance. A lot of that babysitting that we had to do several years ago, we don't have to do now, and we can focus on supporting them as a brand rather than just making sure they're doing things right.
So what I hear you saying is a few years ago, you really had some risk in who you licensed to. They could mess it up and you didn't have the control. Now there's enough confidence, there's enough information out there that you can do these deals and pick the right partners.
Yeah, I mean, even on testing, something simple is having to hound people, we need your lab results, because there was no regulation mandating them to do it. It was us mandating it, versus now, I simply get a copy of what they're already sending to the state. And in a lot of cases, the state is picking up that responsibility. We still mandate it as part of our agreements, but I don't have to stay on them to do it because in order to sell the product, they already had to do it for the state.
Just a follow-up for you, anybody else can weigh in as well, but we have these captive states like you mentioned, and some of them are doing, some of the operators are doing the license deals like you did with Trulieve that you said, but at the same time, we're starting to see some of these operators, multi-state operators, go out and buy brands in the market. I'm just curious what you think about that. I mean, they're trying to be everything, it seems like.
I've always believed do what you do best, and I've never been a fan of verticals simply because I don't think that as a operator that's you can't be a great grower and a great brand builder and a great retail and all the things that come through there out of the gate. Now, acquiring a bunch of those things, and I'll use Origin House as a good example, they took the best of each of those levels in what they felt and put that together, but they kept those teams in place that were doing those jobs well. That makes sense. But to come out of the block and say, I can do everything well, I don't think that's happening. So the buying the brands is building a brand, developing a product that's a specialized skill set. So they're gonna acquire those items that they feel they couldn't do as well on their own, just because it's economically sensible. They already have a market share, they already have loyal followers, they already have formulas, they already understand the equipment list, everything you need. Picking that up and then applying it into their market is a great opportunity. But every company's gonna have a different model, and that's, again, just one of them.
So we actually see, as the industry sort of grows, we see sort of roles shrinking. And I think to Scott's point, on the pre-roll side, where we co-pack for 44 brands, we see folks really slotting into lanes. And I agree that I think vertical integration is just not the way to build great, efficient companies. It's kind of absurd, frankly, if you look across the board at other industries. So what we do see is we see brands being brands and then working with cultivators as their processing partners, and then working with a distributor to go and sell their stuff. So that's what we see, is essentially folks falling into roles that are becoming a little more granular and defined.
Okay, I think we'll open it up. We have a few minutes left. Does anybody have any questions?
We do. Let's hear it once again for Alan and the entire panel. It was very informative. All right, I'm coming. I see you down there. Once again, please keep your questions brief. If you have a long statement, write a book. Here we go. Come on, boy. Here we go.
Ungai will help you.
Hi, I guess I was a little disappointed in the future being painted without vertical integration, and I'm concerned about it with the opportunity of this being the people's plant, that the big guys are going to come in and it's going to be trickle down, which doesn't trickle down, and I'm mostly concerned about the farmers. So, being a farmer from New York, and we are starting a company that has a vertical integration through partnerships. So it's a comment, because when I see all those big names, it looks like we're going to miss the opportunity to be the people that have a different economy for the future in the picture that I just heard.
I don't want to say you misheard what I said, but vertical actually allows the farmers to be the farmers and thrive as farmers. We didn't do and build a farm because there's a lot of great farmers that we can build relationships with and support. And I think that when a large corporation comes in and says, we're going to do our own farm and our own extraction and our own production and our own retail, that doesn't acknowledge the fact that there's already those 4 groups of people there that would be better to support. And that's Bang's position, is we've never been a farm. We won't, is maybe not while I'm in charge, but because we're not farmers. There's great farmers out there, and as a brand and as a product producer, our best contribution to the industry as a whole in its vertical form is to support those who are already doing that great, not figure out how to make more money by getting rid of them. There's a great opportunity for us to support them. And the idea of vertical integration is something that the cannabis invented. Miller doesn't grow wheat. Hershey doesn't grow sugar. They don't grow, Coca-Cola doesn't grow corn. That companies are successful because they support farmers, not try to push them out by doing it themselves. So I hope that's not what you heard as my position.
Scott, I'm over here. It's Ungayo.
sorry.
Ah, the ghost in the back. How can smaller farmers or smaller businesses work with some of these larger investment companies and things? How do you, without getting squeezed out? I mean, you say that Coca-Cola doesn't buy corn syrup, but I'm sure they have a say in the corn prices, right? And so if you're not getting as much per acre or per plant or per pound as you were when you were an independent guy and you got to work with these bigger things, how can they maximize their profit or their yield while still working with some of these larger places?
So I think, well, I've got an answer for you, but I also think that the first step of that is grow really good weed, and someone will want to buy it.
Always the first step. That's always the first step. Weed
Good.
sells itself.
Good first step. Look, one thing first thing that comes to mind is actually a value proposition that we explain to all our partners. We tell them to, essentially to put as much of your weed into pre-rolls as you can because you get more for your buck. It's the highest sort of net back out for a cultivation, essentially. So pre-rolls just back out. They pencil the best. So you take your small buds and you make them worth more than your really nice colas by putting them into pre-rolls. Simple answer.
Hi, I was wondering if you had touched upon licensing, if you had issues with any of the state's regulatory agencies regarding licensing and wanting ownership information, and this is coming from the California permanent regulations that just were released regarding, it was an issue if the BCC wasn't going to allow California companies to license in other states, and it turns out they probably just want the ownership information, but, I just wanted to know how you guys had come across that, if there were any issues around that.
I haven't come across that.
My very quick answer to that is, along the years, we've had to adjust our licensing agreements. Sometimes they were a per unit fee, sometimes it was a percentage of sales. So part of that was understanding how you can operate within the confines of the regulatory issues. Within the regulations. And in some cases, we ended up not doing licensing agreements because there was not a way to do it that was within the confines of state law. We would have been considered an effective owner and would have had to go on their documentation as an owner of their license or a portion of their license. And in that case, they put up all this money for a license. They are not going to have us be an owner of their license. So I think you got to work within each state's regulations, and in some cases that means you don't get to go play in that sandbox.
Yeah, so basically that was the answer. Essentially, you have to back out state by state and basically put the puzzle together, and a lot of it is basically reformatting the pay structure, the compensation structure. It's either a percentage or a flat fee. Or the selling of materials. So it's getting creative to sort of back into whatever that jurisdiction wants it to look like.